Hey guys, Andrei here and welcome back to another exciting video. And today is a very exciting video because one of the most commonly asked questions I get is, how much money should I invest? Andrei, I have $10. Should I invest it? Is that enough? So if you watch this video all the way through, we're going to explore exactly how much money you need to save, how much money you need to invest, and the information that is contained within this video really changed the course of my life. That's what we're going to talk about today, so let's get into it. So the best part about this video is that this contains a universal truth, and no matter how much money you make, no matter where you live in the world, and no matter what platform you use to invest your money, it is all the same. So whether you use Robinhood like I do, or maybe you use M1 Finance, or Webull, or E-Trade, or Ally, or Charles Schwab, Schwab. I don't know why that's funny to me. Or maybe you're into real estate. It does not matter whether you're from the good old US of A or from Mother Russia like I was. The same applies to everyone. But before we get into it, I want to show you a quick little video that reveals some common facts about the average American lifestyle. Spoiler alert, it's kind of scary.
Right now, 69% of Americans have less than $1,000 in savings, and 34% have no savings at all.
So right now, 2 out of every 3 Americans have less than $1,000 saved. Imagine walking into any given room at any given time here in the States and seeing that 2/3 of that room has less than $1,000 to their name. And the third have $0 saved up. They're one paycheck away from going bankrupt. But how many people do you guys know, because I know of quite a few, and some of which are my friends, where they always seem like they're doing so well. They always have the latest iPhone, they're always keeping up with everything, maybe they just bought a Tesla, they're going on vacations. It's like they're living secret lives that I don't know about. Why is that?
The consumerism culture is harmful. It really hurts people.
We are spending money we don't have to buy things we don't need, to impress people we don't even know.
So the clips you just saw were from a documentary called Playing with Fire, which I'm gonna see tomorrow in theaters. I'm super pumped about it. And step number 1 is to get out of this spend mentality as quick as humanly possible. FIRE, by the way, is an acronym for finance, insurance, and real estate. So it is also more commonly known as something else. And that is this new phenomenon that's kind of taken my generation by storm, and it's what really inspired me to get started into this whole YouTube thing, into the finance game about 10 years ago. And it stands for Financial Independence, Retire Early. Let's talk about that word for a second though, because I hate the word retirement. Every time someone says it, I just picture Clint Eastwood just hanging out on a porch with nothing to do on an old wooden rocking chair, just like waiting to die. Like every time I ask, hey, would you want to retire early? Like, no, I just want to continue doing what I love and be young. Like that's a perfectly reasonable answer, but I am a perfect example of this because I do on this channel something called Cardistry Magic. You might have seen some of my videos where I teach this stuff, and I love doing it for people. I love connecting with strangers and giving this mystery and this awe, and you know, it's such a cool art form because I get to connect with people in a real way. So much of our conversations day to day is like, hey, this weather's pretty good. It's hot, right? Yeah. How's work? It's good. Yeah, me too. Like that's what we talk about. And Magic gives this in. They really let you into their life and they tell you their biggest secret. So I love that. But I would be lying if I said that there are days where I wouldn't even touch a deck of cards. Like I would look at cards and just get it away from me. And this is my passion since I've been 9 years old. So it's always good to have a backup plan and always good to have options. That's the whole thing. So I guess what I'm saying at the end of the day is let's rename the whole retirement thing and let's just keep it at FIRE. Let's get fired up. I'm fired up. I hope you get fired from your job. No, I'm kidding. They also call it FI, which I also hate. I don't know why I don't like FI. It's like, hey, you FI? What'd you call me? I asked, are you FI? No, I'm not FI. Just me? All right, I'm done with the word. Let's move on. So without further ado, let's get to the shockingly simple math behind early retirement. Now, I'd like to thank Mr. Money Mustache. I borrowed so much of this stuff from his blog. I'll leave all the links in the description below the video where you guys can go check it out. But stick around to the end of some of these examples because they're really gonna blow your mind. So let's keep this simple and assume that you make $1,000 a month, just for simplicity's sake, which is depressingly somewhat accurate and close to what my YouTube is making per month, but beside the point. So let's assume this. You make $1,000. You make $1,000. Really? $1,000 per month. That's your income right here. And from that $1,000, you save just 5%. So from that is $50 a month. And then you take that $50 and you invest it into something like, let's say something like what I'm doing with dividends every Monday where I buy a stock. You're gonna invest that into a 4% asset. That is going to take you 66 years. I don't have to write it down, but I'm going to because it makes me sound and feel like a real pro. 66 years to retire, which is basically never. You are going to work until you are old, gray, and wrinkly before you can retire, which by then you might not even get on Social Security because it might not even be around by then. So that's how long it's gonna take at a 5% savings rate. Now, the depressing part about this is that this scenario is the one that is most commonly representative of the average American lifestyle. That's unfortunate. But let's bump it up now to 10%. So now that your savings rate is 10%, you are saving and investing $100 a month into the same 4% asset. So that $100 a month is going to get you there in about 51 years, which still is a long time, but that shaved 15 years off of your retirement. But I mean, 51 years is still a long fucking way. So let's bump up that savings rate because we're frugal, and let's go all the way to, what's my next thing? I don't script my videos. What are you talking about? So now you're saving 15% of your paycheck, which is getting better. And at 15%, you are saving $150 a month and investing it. And in that $150 a month is going to get you to your retirement in about 43 years. So we're getting there, we're picking up some pace, but let's increase it now to 20%, which is a fifth of your income. So in the $1,000 a month case, 20% would be $200. So that is now $200 a month we are saving and investing, and that will get you there in about 37 years. So 37 years, now we're getting there. 37 is a little bit better, right? But now let's really crank it up to about a third. Let's do a third now, which is 30%. This is where we're kind of getting more serious now. A third is something really to aim for. So now 30%, which is a third. So $350 a month you're investing at 4% now. How much is that going to take? In about 25 years. That looks like a 3, it's a 2. 25 years. So, I mean, 25 years, that's doable. 25 years if you can save 30% of your income. 30% is pretty admirable, but what you really want to aim for is 50% or more. So let's change that up to now 50% of your income. You're gonna save $500 and invest it every single month, and that will put you at an early retirement date in about 17 years. That's a really good time. 17 years, you can work a job maybe that you don't really like much, 17 years. Now, roughly $500 a month is what my portfolio is generating right now with Robinhood, which is what I'm investing, about $500 a month, which does not mean it's gonna take me 17 years because my spending might be higher than that or might be lower. Whatever it is, my spending is not that much higher than this, believe it or not, right now. I try to keep it lean, try to keep it low, no car, you know what I'm saying? You know what I'm saying. Now, just for fun, let's really increase that number now to something like 65%. 65%. This is really crazy because 65% savings rate is going to get you there in roughly 10 years. That is a very short time horizon. So I'm looking at you guys who are earning $100,000 a year or more. If you guys can save 65% of your income, especially if you're a couple and you guys are dual income, saving 65% is gonna get you there in just 10 years. Assuming that you can resist the urge of buying fancy things to show society how successful you've become. Now, before I get hate mail telling me that you don't know what you're talking about, it's all about trading options, Tesla, Bitcoin. So before we get into that, here's just some of the assumptions that I made. The assumption that I made is that you guys can make 5% returns after inflation, which the stock market has historically done, and that your investments are paying you at 4% per month. Like for example, my dividend stock portfolio is paying me at 4%. And the last assumption that I made is that the money that you guys have invested and that you're withdrawing from will last forever. So you heard that right. That money should never ever run out. So you can use that and think of it as like a safety margin, so to speak. So if you imagine this money really never gets to run out. It's like imagine a tree, right? And it's growing at a really quick rate. And as you're chopping it down, you're just cutting some of the wood. You can't actually chop the whole tree down because it's growing faster than you can get to it. That's really the best analogy that I can come up with. But if you guys can come up with a better one, I'm all ears. I'm all eyes because I gotta read the comments, but that's kind of how it works. And here is a crazy, mind-blowing part that personally took me a while to kind of grasp and understand. The stuff that I showed you guys on the whiteboard, that stuff applies no matter what your income is, no matter how much money you make. So in this example, that person's making $12,000 a year. Well, that is the same for him than it is someone who's making $1 million a year or $10 million a year. The numbers are all relative, which is kind of crazy if you think about it. So if you're able to save more money, you'll get there quicker. So that's why, when I meet my fellow millionaires, as I say fellow millionaires as if I'm one of them, I'm not quite there yet, but I'm not always impressed by people who are seemingly wealthy. And that's because when you reach a certain level or a threshold of income, you start to get bored with life a little bit, right? Like, what do you do to spice things up? What's life without a few Ferraris and a few Teslas and a nice big mansion house? Well, what's interesting about that is the stuff that they own ends up at the end of the day owning them. And if they were to leave their business or leave job, leave job, I'm Russian now. So if they leave the job that they're in, whatever they're making, they would go bankrupt just as quickly as any normal average person who's making, let's say, $50,000 a year. It's all relative. And so what's impressive to me is somebody who doesn't live inside of a cage. Because if you assume that we all live in these cages called jobs, then the person who's wealthy and seems like they've got everything, they also live in a cage. It's just their cage might be a little more glittery and a little bit prettier and shinier than yours, but nonetheless, the fact is they also live in a cage. What's impressive is somebody who doesn't live in a cage and is not bound by any of those things. So that's what my goal is in life, is to not be bound by that stuff. And the quickest way to do it is not by increasing your income, like I mentioned in some of the videos that I do, but rather by saving your income and cutting costs. Because not only do you have more money now to save and invest, but also you need less money in the future to actually invest. So it has a double positive effect. So those are just some of the things that I think are kind of important, that have blown my mind. So lastly, I will leave you guys with this fun fact. If you smash the like button and subscribe and hit the bell notification, you too will help this poor young boy grow his YouTube channel into a massive, massive thing that helps people all over the world become wealthy by saving money and being awesome. So thank you guys so much for watching. I'll see you guys very soon. Peace out.
Stand up.
No, I got no pants on.
I know, stand up.
Gosh, Corey.